And welcome back to Real Side Radio. Dave Sussman here in the chair. And, of course, we are across 70 stations on throughout the fruited plain on the GCN and Salem Radio Network. And we've got some calls lined up here. But before we get to the phone calls, I was talking about the economy in the last segment. And there's no better person that I know. He's been on my show, Whiskey Politics, before. Wanted to bring him on to talk about just this incredible, just this global economic crisis that we're seeing right now, especially on the hills of oil going negative dollars yesterday. The man is Brent Berarducci. He is the principal and manager of Black Lion Capital Management out of Texas. The man is also a U.S. Navy. He served with the U.S. Navy, and he was a fighter pilot. And you can find him and more information about Brent over at blacklioncta.com. Welcome back, Brent. It's been way too long. And I was thinking, was it 2 years or 3 years ago we had you on Whiskey Politics?
Oh, it's got to be at least 2 years, Dave. It's great to be back with you. I'm just sorry it's under such stress circumstances. You sound well.
You know what? Listen, you make a decision in the world right now. You either push forward and you fight through things and you live to fight another day, or you let things take over. And you're the same as me. You're going to try and find opportunities in a crisis right now. But I'm just going to throw it out to you right now. The price of oil per barrel was $63 in January. Yesterday, they were paying people to store it. Today it came back somewhat. It's in positive territory right now, but barely. What the heck happened?
Well, we've got to first kind of bifurcate yesterday and today, because those were actually two separate contracts. The contracts that you saw trading negative yesterday, I think the low print I saw was 37. That was actually May future. So that's the symbol for that. CL is crude oil. K is the month of May, 20 obviously being the year. So CLK 20. Those were the May futures. That was their last day to trade. They went into delivery today. So while that was going on and those were trading negative, the June contract, which is what we're quoting now, CLM20, that didn't dip below 20 on Monday. Now, the next day it got a little ugly, but that was for a separate issue. So what we saw with the negative prices there, and just like you said, people were having to literally pay to take oil off their hands, was a lack of storage space in Cushing, Oklahoma, where the contract is physically delivered.
So it's storage space, but we've also got this geopolitical situation between Russia and Saudi Arabia. Talk about that and how that's impacting the price right now.
The impact of that really was several weeks ago, and there's no polite way to put this other than just a complete radical asinine move by literally, and I don't know exactly who to put the blame on, but everything I've read, it really starts to wash back up on Saudi Arabia's shores. And, understand that OPEC is a semi-fragile organization to begin with. Certainly the rise of the United States of America as the world's largest oil producer weakens their position around the globe. But then, obviously there could be some tension there, but for them to go and pull this stunt in the middle of the onset of the virus is just a complete lack of head work. I think they've really destroyed any credibility or goodwill in the world, from an oil perspective. Now, obviously, they still wield a great deal of influence. They have low marginal lifting costs. They do have flexibility in production, but I just think that they were so clumsy and heavy-handed trying to wield that, whether it was directed at Russia or whether it was directed at the United States of America, that I think they've done some lasting damage to the market, and I don't think they can sustain this.
So what you're telling me is that, we're really looking at a perfect storm scenario right now, because obviously the world is shut down due to COVID-19. You have the oil situation that's occurring, Saudi Arabia, and then the storage aspect as well. We're talking about some numbers right now, which absolutely boggles the mind. You were like me, very much well-versed in what happened in 2007 to 2009 with the Great Recession. The numbers that we're seeing right now regarding unemployment, regarding to the GDP going lower, the recession that we're about to be reported, I think we all realize that we're currently in right now, I think far and away surpass what we saw in 2008. How do you see this all shaking out right now? What is your economic forecast telling you?
My econ forecast is that we should pray for a recession. I think that we'll get a depression. Now, there's definitions. They're somewhat loosely held of what a recession is, but they're largely agreed upon. A depression is a little more subjective, but the thing that I key off is a 10% reduction in GDP. In 2019, the seasonally adjusted GDP was $21.73 trillion. I think the idea that we will achieve 90% of that in 2020 is no chance. Not with the unemployment insurance claims that we're seeing. And then now, the unemployment insurance claims, the one that we want to start really focusing on, and this will begin tomorrow, is going to be the continuing claims, because what that's going to measure is how long people are still on unemployment and the rate that things are going back to work. And I'll be honest with you, Dave, I'm not optimistic that we're going to see a lot of the consumer-oriented things. Think about the professional sports. You say, well, that's just a couple of athletes. No, you've got to look at all the support and infrastructure that goes into support those events. Look at things like movie theaters. I don't know how that industry comes back. Shopping malls, commercial real estate for shopping malls was already on its back foot, and it's just only going to get worse. So it's going to be very hard. I do not agree that there will be a V-shaped recovery. This is not going to be a situation where we're all going to take our masks off, the kids all go back to school in the fall, and that, by August or September, we're doing the same level of GDP activity that we were in January, February. No shot of that, in my opinion.
Yeah, I don't think that's possible, especially the way that this economy has just been interrupted. And it is also just the American economy. This is a global economy that we're in right now, and demand across the world has obviously come down to, to levels which are recessionary. And recessionary you just mentioned it. I think the classical definition is 2 back-to-back negative GDP. Quarters with negative GDP. But depression, I guess, is when you're out of a job, right?
Yeah, the old adage is it's a recession when your neighbor loses his job. It's a depression when you lose yours.
Yeah. A lot of people have lost theirs. So we're coming into our first break here, Brent, but real quickly, remind everybody where they can find you and more about what you're doing over at Black Lion and what Black Lion is, real quick.
Black Lion is a commodity trading advisor. We manage separate accounts for high net worth individuals, or not necessarily high net worth individuals in some organizations, solely trade futures and options on futures with a commodity emphasis, particularly in the energy area. And you can find me at blacklioncta.com. If you're interested in updates on the energy market, check the blog. We do 2 video reports there a week. Love to get some new visitors.
Yeah, and get on his email list. It's great. I get it every single day. We got Brent Berarducci, who is with Black Lion CTA, Black Lion Capital Management. We'll be right back after the break here to talk more about what's going on in the economy. Dave Sussman here at Real Side Radio. We'll be right back, folks. Yeah, with everything going on in the world right now, I still feel like a lucky guy. How you guys doing? Dave Sussman here, Real Side Radio on the GCN Salem Radio Network on 70 radio stations across the fruited plain. It is really good to be with you on a Wednesday night. We are talking about everything for the next 3 hours, from the economy to, we're going to be talking about what's going on in Vegas in the next hour and if that city is going to be able to come back as well. And also in the third hour, we're going to be talking about the fact that Harvard wants a presumptive ban on homeschooling. Yeah, Harvard University. Apparently they just gave back. Did you hear this, Cody? They just gave back their $9 million with their $40 billion endowment. Yeah. But first, we're talking the economy, and there's no better person. A guest, Whiskey Politics. You guys should all go back and listen to that show, because Brent Berarducci knows what is going on. He is the principal and manager of Black Lion Capital Management. We were joking with the Top Gun music in that last segment, in the bumper music. Yeah, the man was a Navy fighter. He was flying those planes just like Maverick and Goose. And it's great to have you back here, Brent. And thanks for joining us. And you're based out of Texas, correct?
I am right in the heart of Dallas.
You're right in the heart of Dallas. So talk to me from, when I think about the economy and what is going on right now, everybody's got the microclimates, what's going on in their backyards. From a macro perspective, I want to hear what you think is going to be happening right now. Texas is very oil intensive, very sensitive to what is happening right now, the fluctuations. What do you see happening there in the great state of Texas?
Well, right now, the best description I can give is if you go anywhere, it's like driving around on Christmas Day. I literally am in the heart of Dallas, in the Knox Henderson area. If I look out my window, I can see the skyline. So certainly in the heart of the city, very little activity here. Real estate sales have more or less ground to a halt. People are just pulling all the signs up. We don't feel the oil and gas hit directly in Dallas. Obviously, we're not an area of operations, a very large hub for private equity and financing. A lot of midstream firms are headquartered here. So we get a lot of that activity. But, the operational side is really going to hit Houston a lot more. So that's going to impact Texas. But one thing that folks need to understand is I think the last time the Dallas Federal Reserve released the statistics, only about 14% of Texas economy is related to oil and gas production. I say only, that's substantial, but we're a very diversified economy.
Yeah.
But that being said, that this virus crisis is touching all aspects.
Yeah, it is touching all aspects of the economy, whether it's, you talked about, restaurants and entertainment, theme parks, movie theaters, everything else, sports. I don't know about you, but I missed my hockey, man. We should be in Stanley Cup right now. But, the thing is that it isn't, I agree with you. What you said in the last statement, in the last segment, Brent, was that you do not believe this is going to be a V-shaped recovery. Now, this is what the president and Steve Mnuchin have been talking about for the past couple of months. And you've got a lot of indicators showing that this is going to be more like a flat U. The question is, for how long? And the second question is, what does it look like after? Because if we're going to lose 30 to 40% of the businesses that are closed right now, they are talking about a new normal, aren't they?
Absolutely, it's going to be a new normal. And I think the question that's going to really drive what does this look like going forward, the first thing that we're going to see, and I think it's already underway, is a realignment of supply chains away from China. Now, I don't necessarily think that means that we're going to be getting all of our fly swatters and frying pans and whatnot made in the United States of America. I think that the lower rung commodity products are probably going to move to North America. I do believe that Mexico is going to be a huge beneficiary of this realignment of supply chain. So I think that's going to be one of the first things. I think that there's going to be a reset in the United States of America. And what is going to be reset is going to be asset values, meaning homes. Okay, you can't displace 20+ million people out of jobs. I mean, I've got people in my neighborhood that are just like, they're walking up to me going, I lost my job, and it wasn't like I got laid off and we're going to call you back, because the business is just gone. These are middle class, white collar, high 5-figure, low 6-figure kind of jobs. Now you're going to have this enormous supply of labor, decreased demand for it. Wages are going to reset lower. That's going to limit people's ability to service installment debt, such as mortgages, auto notes. Think about anything that would be purchased on a conventional amortized debt structure. The ability to service that is going to be reduced. There's going to be an increased supply of residences on the market, and I think you're going to see a deflationary shock that is going to reset all of those asset prices lower. Then the next question is going to be, with this enormous debt overhang, with the enormous deficits that the government is running, and let me just say this, the models for those are horribly bent, because everybody's assuming that tax collections will remain constant. That's not going to be the case. So you're going to have this enormous sovereign debt issue. You're going to have impaired commercial real estate debt out there. You've got very well-established, reputable chains, Cheesecake Factory, April 1st. We're not paying, not because we're jerks, just that we don't have the money. Well, they haven't opened up in April, so I don't know how May is getting paid. So if you've got this large commercial real estate debt overhang that's not being serviced, you're going to start to impair those asset values. So I think that once you get to the other side of this U, and I think that's a great description, Dave, I endorse that the climb out of that is going to look very different, because of the individual and business real estate focus in this economy is going to reset at a lower level.
There's so many different aspects of what you just covered there, and I'd love to have you on for another segment after this to cover it, because at first I wanted to delve into China and the last 30 to 40 years of malfeasance that our politicians on both sides of the aisle have committed with putting China in such a powerful position. But real quickly, commercial real estate, residential real estate. You're talking about a resetting. I mean, you said in the last segment that we should pray for a recession to avoid a depression. That right there, I mean, a lot of people's net worth and equity is in their homes, or maybe they've invested in a strip mall or whatever it is. Are you seeing that wiped out?
I wouldn't say wiped out. I don't want to be that alarmist, but you've got to ask yourself, okay, 22 million people out of work. That's just in the last several weeks. We get another report tomorrow. Estimates somewhere in the 4 to 5 million range. You've got the St. Louis Fed, who, let me say this, the St. Louis Fed is generally one of the more optimistic Feds, estimating 46 million unemployed at the peak of this. Okay, when you have that many people unemployed, okay, they're not out house shopping.
Yeah.
Okay, when you have an aggregate demand destruction or demand limiting out there, we're not going to go tear down houses. Okay, they're all still here. In fact, there's still construction going on around Dallas. There's probably construction occurring in California. So the supply of homes is what it is. Now you reduce the demand for that. The only way this can reset is at lower equilibrium. So, is it going to be wiped out? But you're going to have situations where people are used to their houses appreciating 3 to 5% a year. You say, hey, I've got this house that's at $350,000, $400,000 up in North Dallas. Going forward, that may be a $250,000, $300,000 home.
As I was saying to you during the break, my buddy, one of my bestest friends, I went to a Who concert with him 6 months ago. He's literally on his way to Dallas right now to start a new life. And he's going to hold on to his cash to see what's going to be happening in the local marketplace, because he thinks he's going to now get a really good deal. Luckiest guy alive. He sold his house, escrow closed, during all of this. I mean, you couldn't have planned it better. We got 1 minute left, unless you could stay with us for a few more minutes after the break. I don't know what your schedule is like here, Brent. Are you good?
Yeah, happy to visit with you for a few more minutes, Dave. Appreciate the opportunity.
Yeah, because I really want to get into some of this as well. The issue, you're talking about a global reset, and this is the thing that I think a lot of intellectual, economic-minded people are focusing on right now, the macro. I laughed when you said fly swatters and frying pans. But yeah, Mexico or Vietnam or Thailand or other places around the world, you've got American companies all pulling stakes right now out of China. Do you see a major realignment there? I want to get into this after the break with you. Do you see a major realignment, geopolitically speaking, with China? And is that something that we really have much control over? Because it seems to me that there are so many businesses inside the United States of America that aren't even owned by America. They're owned by China to begin with. We're going to get into all of this and a lot more. Perfect bumper music here for Brent. Brent Berarducci, folks. Go check him out at Black Lion CTA. Again, he is the principal and manager of Black Lion Capital Management. This man knows what is going on. And really appreciate you staying with us through the break here. We'll be right back. And we're back here at Realside Radio. Dave Sussman here in the chair across the Fruited Plain. 70 stations on the GCN Salem Radio Network. And you can also find us at realside.com on a beautiful Wednesday night, no matter where you are throughout the country. And we're talking with Brent Berarducci, who is with Black Lion CTA, Black Lion Capital. You can find him at blacklioncta.com and also on Twitter as well at Black Lion CTA. And before the break, I really wanted to get your impressions upon any geopolitical realignment that you think is going to happen right now because of the, I would say, the anger. It's palpable, isn't it, towards China right now, and what that's going to look like economically speaking, Brent?
I think that what we're going to see is high-value goods, high-margin, high-value products. I think their days in China are numbered. Now, and again, I don't know that that's going to come directly back to the United States of America. I think it'll be a move to North America. Mexico, I think you will see something. I think one of the huge things we've exposed: pharmaceuticals, surgical supplies, things like that. Obviously a chink in the armor there with all of that, coming out of China. I still think, commodity goods, Asia will still be a destination for many of those things to be manufactured, but I definitely see a realignment. And I think you're going to see, and because of that, I think you're going to see China's influence in the world wane.
So a lot of people are suggesting that the numbers that have always come out of China are essentially, well, they're just lies. We know this from whether it's the economy or whether it's the numbers regarding how many people are actually sick, that everything in China is about perception, how they want the world to perceive them. If you say the wrong thing, you're thrown into the Chinese gulags. But is this something that do you think will wake up those powers that be in D.C.? Because on both sides of the aisle, Republican and Democrat, going back 40 plus 50 years now, have essentially put us in the position where we have allowed China to control so much of the economy and really the future for so many countries in this world.
Well, I don't know how much. It's going to be interesting to see how much of Washington, D.C. is going to influence that, because Trump has obviously been very proactive with, I'm a tariff guy, and trying to realign some of this, but he hasn't enjoyed tremendous support out of Congress for it. And I think it's going to take more than anger to realign us. I think there's going to have to be some economic incentive, and it's going to have to make some economic sense. But I think what that's going to come into, where you'll initially see it, is going to be the critical supply items, particularly medical, pharmaceutical, that have been sourced out of China. I think you're quickly going to see those moving back to the United States, to North America. And I think even some of the commodity production that moves out of China, I think Mexico is going to really get the benefit of that.
The economy is a living, breathing entity, Brent. It expands and it contracts. It's like lungs. And if it expands too much, you get a big pop and an explosion. And that's how you got 2008. And if it contracts too much, you go into, obviously, recession and depression. This is different, though, right? I mean, and I hate to ask you to be a prognosticator, because I don't think any of us right now can predict just how severe this thing might become. But if you see a realignment with China, that's money that comes back to the Western Hemisphere, specifically North America, especially the United States. Do you think that helps offset any deepening of a potential cataclysmic depression whereby we have a recession? Or, as we were talking during the break, do you see commercial real estate and people's assets taking such a bath that it's going to take us years to dig out of this?
No, I still think that the asset prices reset lower. I think that there was a mitigating factor that will help. We're not going to go into as deep a depression as what we saw, 80 years ago, 90 years ago. But we are going to be much flatter. It's going to take a longer time before we start to increase and slope back upwards. And I think that slope is going to be very shallow, particularly initially. I don't think it's going to be any sharp shock. You'll see some of the investment banks, JPM, Goldman, and whatnot out there saying, hey, we're looking at 20, 30% GDP contraction in Q2. And then they're saying we're 20 to 30% expansion in Q3. No shot of that. Mm-hmm. I do think that the thing that will keep a floor underneath us is the Fed. The Federal Reserve has been extremely proactive, working with the Treasury to secure the credit markets. Now we can debate money supply, fiat currencies, and whatnot, but I'm going to give them their day. They moved extremely fast, very agile, and they are keeping the credit market from imploding on itself. How long they can do that, to be determined. What is this going to start to look like when the Treasury, they did this all of this through special purpose vehicles, a portion of which was capitalized by taxpayer funds from the Treasury. Any losses or write-offs are going to go against that. This is not. That's going to be.
They're buying the bank notes. That's what you're referring to. They're buying the bank notes and the CMBS notes as well. So commercial real estate is going to be safe. So let's talk about this, because I remember our episode when you came on last time, and you have a deep, genuine, let's just call it a loathing right now for the national debt. And, we've talked about, right? I mean, if I can.
Oh, yeah.
And so when we talk about what we are looking at right now, we're looking down a gun barrel, okay? And so you're correctly stating what the Fed and the Treasury, which is more or less combined, they're one of the same now, had to do to keep liquidity flowing in the economy, because without that, it's the lifeblood of the economy. You come to a stop. And you don't have milk on the store shelves. Truckers, don't get paid. We're done. But we're now talking about ideas that are coming out of Congress. There's 2 bills that have already been written. One is going to take care of your rent and your mortgage for the next 6 months. And 2, they're talking about $2,000 a month to every man and woman and child in this country to keep cash flow going. I don't know if those are going to actually come up for a vote, but these are the types of things as a country, I call it a pseudo-capitalistic democracy, that we're now talking about. Is that concerning to you?
It is very concerning to me, and where you've got to kind of look at where the stress relief is. Where is the pop-off valve going to be? And my concern is that it will be in the currency. By flooding, that amount of money supply, and especially it doing a direct disbursement like that, we've been able to manage all of the quantitative easing and this enormous balance sheet expansion, because that's really gone on to bank balance sheets. Mm-hmm. It's bolstered the banks. That's really has not. I mean, you can talk about the PPP, the $1,200 stimulus checks and whatnot. Those are really almost rounding errors. Everybody's like, "Oh, PPP was $300 billion." It's like the Fed balance sheet's expanded by more than $1 trillion in a week. Okay?
300 billion is a rounding error. These are the times we're living in.
Yeah, I mean, you're a $6 trillion Fed balance sheet. I mean, 300. What's 300 billion between friends? But now you're talking once that gets out into the economy, and then the velocity of money picks up. Now you're going to start to see inflation, which sounds kind of good, but it really won't be, because then you start to risk hyperinflation. Then it begins to start looking like Venezuela a little bit.
Yeah, little Weimar. Yeah.
Yeah, and I think that there's going to be a lot of hesitance. I think that I think people will push to just say, take all of the limits off, let people start making their own decisions, getting back to business as best they can, start to let a little bit of the bankruptcy process work, the foreclosure process and whatnot. But even the foreclosure process, I think that's going to be problematic. It's like, okay, you've got a $350,000 first lien mortgage on a home, okay, and the person, can't make their full mortgage payment. And you're going to foreclose and take it to the courthouse steps to flip it into the market for $200,000. Mm-hmm. I mean, I guess if you're so inclined, go ahead. But this isn't a case, because it is so global, and you've described this very well. This isn't a one-off situation. It isn't just David Sussman lost his job. It isn't Brent Berarducci just lost his. Mm-hmm. When everybody loses their job, where are you going to go with this stuff? You can't say, hey, this guy lost his job, or this guy stopped paying the mortgage, we're going to foreclose, and then we're going to put this thing flip it right back out into the market. We'll maybe take a 3 to 5% haircut and get on down the road. Yeah. You're flipping it back out in the market to who? To 46 million unemployed people?
That's the problem.
Who's lining up for this?
That's the problem. And at the end of the day, and I hate to cut you short here because we're coming into our last break, top of the hour, but the numbers that I'm reading, and I read the same stuff you read, okay? I mean, it's just, I'm a lay economist myself. I'm also in financial services outside of this stuff that I do. And what I'm hearing right now is, by the time this is all said and done, they are talking about a $20 trillion balance sheet, Brent. 20.
Not unthinkable. Not unthinkable.
I mean, they have to somehow keep milk going to the store shelves. And it's going to be the Fed. It's going to be the Treasury. And I'd love to have you back on again down the road to talk about more of this. We shouldn't go so long in between because you are a fountain of information and knowledge, and you really are there on the front lines. Brent Berarducci, everybody follow him over at Black Lion CTA on Twitter and at .com, where you can find more about him and his services. Thank you, good sir. Greatly appreciate you taking the time tonight.
David, all my best. Wish you the best with the show. We'll talk again soon.
Likewise. Thanks, Brent. And we'll be right back at the top of the hour here at Real Side Radio. Don't go away, folks.